Okay, so we were talking about trial balances and errors. So we were talking about those errors which will be revealed by the trial balance. So one would be the addition errors, the other would be different figures used for debit and credit entries, and the last one is that only one side of the transaction was uh, entered. This means when we made cash purchases of 100 euros, we might have debited the purchases account, but then we forgot to credit the cash account with the same amount. So these are the three type of errors that are revealed by trial balance. So if your trial balance does not balance, I'd say to kind of like find out the difference, whatever the amount of difference is. First of all, try to make sure if that difference is similar to a transaction amount, which would show that you missed that transaction. If not, try to recheck all the balances of the account that you balanced off to see maybe whether there wasn't any addition error. The second would be to see if like to go through all the entries and see whether you have taken both sides and recorded both sides in the accounts, and then the figures that you recorded were of the same amount. However, even if your trial balance, so this is how you could try to make your trial balance. However, even if the trial balances, there are certain types of errors which the trial balance would not show you, and these could be either omitting a transaction completely, which means you just forgot to take into account one transaction completely. So there was no debit, nor there was credit. So the trial balance would balance, but then it does not mean that you didn't make an error. So there would be an error, but the trial balances would not show that. The other could be compensating error. So for example, if you kind of added 10 to the debit side by mistake, and you added the same 10 by mistake on the other side, the trial balance would balance because it will the balance of the credits and the debits would be the same. However, there is an error. So you should be careful that the trial balance is, yes, a very good way of ensuring that errors are minimal, but there could be some other errors as well, which the trial balance would not show. So this is how what this chapter covers. So just to kind of like revise again, trial balances shows the balance accounts of the business at a period end, which is generally a month end or a year end. The process of it would be to close off all the individual accounts and then list down the account names and put in either a debit balance or a credit balance, and in the end total all the balances to ensure that they are all the trial balance total balances. We will use this trial balance then to move on to the next step, which would be to create financial accounts. We will be doing multiple choice questions. So I'd like you to try to attempt all of these questions and then we'll go through it in a few minutes. We'll we'll continue with doing a few of the multiple choice questions. If you haven't gone through them and marked your own answers, I would really advise you to do that, so that when we are doing it, it's just like a confirmation of your answers rather than you having to started doing it from the beginning. The first question is, which of the following statements is incorrect? It is related to the accounting equation, which everyone should kind of like know it by heart at this stage. So the basic accounting equation is asset is equals to capital plus liabilities, which can then be moved around, but the answers would be the same. So if assets is equals to, so the first one looks fine because the capital is on the other side. If you subtract from capital, you'll get liabilities. Liabilities plus capital is equals to assets is also the correct one. Now the C one, liabilities plus assets is equals to capital. No, because it's always liabilities plus capital will give you assets. So the first answer is C. Which the second one, which of the following is not an asset? We did this in chapter 2, the different types of assets, and you should know by heart at least five of each. So the assets examples you'd know more because there are more. There are many assets, but for liabilities, you should at least know three of the different examples. So here, buildings, cash balance, debtors, they all look asset. Loan from K Harris. Loan is sort of like a liability. We owe it to some other person, which we have, which means we don't own it. We owe it. So D is the wrong answer. MC3. Which of the following is the liability? Again, like you need to know all of the different types of assets and liabilities to make it very easy for you to figure it out in this. So, machinery is an asset. Creditors for goods is not an asset because we don't own it, we owe it. So, B is the answer to this. Question number 4. Which of the following is incorrect? So it gives you, you have to use the accounting equation to find out that assets is equals to capital plus liabilities. So you would have to add the liabilities and capital and see whether it equals to assets. So for the 4 one, the first one, liabilities and capital equal to asset. That is B also, but for C, it does not equal. So C is then the wrong answer. Well, MC5, which of the following statement is incorrect? Now, this is the double entry effect. So we will look into all the options. Now, first, we paid a creditor by check. So generally, whenever any item has bank in it, the bank we paid, so bank would reduce. So bank would be minus. So asset is bank. Bank will reduce. Liabilities will also reduce because if you have repaid the creditor. So the first one looks fine. Second one, a debtor paid us £90 in cash. Cash would increase and debtors would not increase here. Sorry. Oh, sorry, I'm just going to it in the other way. If you have to find out which one is the correct one. So the first one is the correct one. The others are incorrect. So MC5A is the correct answer here. Question number 6. We have to choose which of the following are correct. So it is the concept that we did in the second chapter. Assets. To increase an asset, we would debit it, and to decrease the asset, we would credit it, which is correct. Capital. To increase is debit? No, because to increase the capital, uh, it is a credit. So second one does not look correct. Let's look at the third one, liabilities. To increase the liability, it's a credit. To decrease the liability, it's a debit, which is correct. So it's 1 and 3 which are correct. So 1 and 3 here are in option C. So for question number 6, it's C, which is correct. Question number 7, which of the followings are correct? Bought office furniture for cash. Cash would be credited and office furniture would be debited. This is correct. A debtor, P. Sangster, pays us by check. So bank would be debited because we receive money by check. Bank would be debited and a debtor would be credited. So P. Sanctor would be credited. Number 3, introduce capital by check. So when you introduce capital by check, bank would be debited and capital would be credited. This is wrong. Let's look at the fourth one. Paid a creditor Beely by cash. Cash would be credited and Beely, who is a creditor, the liability will reduce, so that would be debited. So in this case, the third option is wrong. So it's 1, 2, and 4 which are correct. So in options A to D, we'll see where is 1, 2, and 4. So it's going to be it's option C. So M7C is the correct answer. For MC8, which of the following are incorrect? We look at the 4 entries and see which one are incorrect. So sold van for cash. We sold van for cash. So cash would be debited and van would be credited. So this one is correct. So we're fine with this. Number 2, return some of office equipment to suppliers. Return office equipment because office equipment is an asset. It has reduced. So it should be credited and suppliers would reduce as well. The supplier, when they reduce, they would be debited. So we'll debit supplier and credit office equipment. Here it's done the other way around. So this is clearly incorrect. We'll move on to number 3. Repaid part of loan from C. Charles by check. Repaid loan, which means that the creditor uh, the liability would reduce. So to reduce the liability, we would debit C. Charles and we repaid by bank. So bank would reduce. So credit bank as well. This one looks correct. Entry number 4. Bought machinery on credit from Better Ways Limited. Bought machinery. So we got an asset machinery which would be debited and Better Limited liability has increased because we bought it on credit. So the liability Better Ways Limited should be credited. Here it's done the other way around. Machinery has been credited, whereas it's an increase, so it should be debited. So this one is incorrect. So 2 and 4 are incorrect. Look at 2 and 4 are incorrect, which is option B. Sorry, no, which is option A. So it's